Yo, what's up? I believe you're having good moments in the chats. Hope we are winning. Hope we're winning. All right. So in this lesson, I'm continuing with what I've just studied on market structure, right, on derivative synthetic indices, right. So in today's example, I will be talking about market structure, specifically break of market structure, what it is and how we actually apply it in the forex market, right. So what happens is this: our market is always going to be continuing in some direction. For example, if we're in a downtrend like this, right, you'll see continuations in the direction whenever the market breaks a previous low or a previous high in the market, right. So this situation or this scenario where the market breaks this previous low is what we actually refer to as a BMS, or a break in market structure, right. And for our BMSs, there are three ways in which we verify our BMS. The first scenario is when you see a wick, right, moving below a low or a high, right. The second scenario where you see a candlestick close below a low and a high. I will illustrate that in the chart, right. Then the third situation is when you have at least two candlestick closes below a previous low or a previous high, right. And for my trading, I actually use the third scenario, which happens to be the most accurate one, right. There's a video that I actually did in this channel for that. You can actually check on it so that you'll be sure of what I'm talking about, right. So I will explain with the one that I use, where I have to see my market breaking this previous low with at least two candlestick closes right below that low. That's the most accurate one, right. So a break on market structure, we are saying the market is now shifting to new lows in the market. So whenever we see our market shifting to a new low, breaking previous lows, like what is here, right, we are now expecting, or we anticipate, that our market is going to correct or is going to be respecting that downtrend that is actually in, or the trend that it will be in, right. So in this case, we'll be expecting our market to correct back to this zone that happens to be our supply zone. Then we're going to get some sales and we continue like that, just as simple as that. That's all what we call break in market structure, or BOS. Some call them BOS or BMS. It's one and the same thing. Or market structure shift, it's one and the same thing, right. So let's get to the chart and analyze with a real example, right. So for this one, I'll actually use V75, right. I've promised the guys in our WhatsApp platform that I will explain this concept with V75, and I'll actually give an analysis of what I'm expecting on this very pair, right. So this is our V75. This is our V75, and we are on the 8 hour time frame, right. So I will just investigate what has been happening from this point to where we are, right. So if you look closely to this, you can actually tell that there was a wave that came to this point, they corrected back to this point, then it moved to this low, right. So let's investigate from here going to where our price is now, right. So what you do when you are analyzing your structure is you look at the low that price has created. Price has created this low, right. Let's just put a horizontal line to mark that, right. So I have to see at least two candlestick closes below this low that I have marked, right. This weak break is not a close for me, it's not a break for me. Then here I got a one candlestick out of that low, then another candlestick came and closed above that low. So for me, I don't consider this as a market structure shift or break in market structure, right. Instead, our break in market structure actually happened here, right, where we are seeing that we had one candlestick close that happened below, then we have another candlestick close, and we're seeing clearly market is now playing below that low. This is what I consider to as a break in market structure, right. So the first two scenarios, we don't consider them there, which is a candlestick close, and the other one, which is a weak close like this one. I don't take this as a candlestick, as a break in market structure. I'll explain what it is as we further in our studies, right. So if you look at this point, our market was actually coming from this point. This is the highest point which market was actually coming from. Then it got to this point, right? So this scenario is what we are explaining to as our what? Is our BMS, or break in market structure, right? So after this, right, we got a corrective move. This is a corrective move that came to the highest point that happens to be here, right? And for you to do it easily, or for you to understand it, what you can do, right? You can mark this high with the horizontal line so that you won't be disturbed. This is the previous high or the last high, or what we can refer to as a strong high, as some will want to explain it. This is a strong high that has been created because the market hasn't actually broken that high, right? So this is actually a strong high, right? Then this low that will be here, it will actually be a weak low, right? This will be a weak low, right? And it will be confirmed with a break that will happen. The moment we see a break happening on this point again, let's just project this line to our right. Right. So if this low is broken, right? So if a strong high and a weak low, right? If this weak low is broken by price, at least 2 candlestick closes below that one, right? We'll term this a BMS again. That's how we formulate our BMS. We'll term it a BMS. But if this strong high was to be broken, we're going to term that one a church, a change in character. But in this case, we're seeing that they've broken the law. So it tends to become a BMS, and we have 2 candlestick closes below that. So that's our BMS, meaning our trend is moving to the downward direction. So let's move to the right and investigate what's happening there. So the high that is actually broken this low is this one. That's where our price is actually moving from. So our strong high shifts from this one to this one, because this one is the one that has caused this break in market structure. This was a strong high when it actually moved or caused price to break this weak low that we had here, right? That's when it was working as a strong high. So in this case, it is shifted to this one, right? The one that is actually caused a break in market structure is what we actually refer to as a strong high, right? Then after this, we'll be having a weak low that we'll be having here, right? The reason why we call it a weak low is we are in a downtrend and we expect price to actually break that low as we continue in the what? In the downtrend. Let me actually put it on the rightful position, exactly like that. All right, so here price actually came to this low and it broke with at least 2 candlestick closes below that point. If you look or zoom clearly, this was a bearish candlestick, then this is a bullish candlestick. It closed just before that line, right? So that makes it a BMS, or a valid what? A valid BMS, right? So let's continue with our study there. So this becomes another what? Another BMS or break in market structure, right? And the move that has caused this break came after we had this corrective move, the highest point being that, right? Then the high that is causing the break in market structure is this one, which here I have to consider the lowest point. Okay, so the high that is causing the break in market structure here is actually this one, right? So it means that our strong high now, it is actually shifted from that point to this point. This happens to be our strong what? Our strong high, right? So if you look clearly at our analysis, we are breaking down this V75 to actually have a story to tell about it and to actually map where this thing is actually heading to, or where it is going, right? So here we are seeing that our price, we were expecting our price to come, right? We're expecting our price to come. This was a corrective move. They actually respected this supply zone and they started moving down, right? But the momentum seems to be shifting, and it has managed to shift from this point and it has gone up to break this strong high now. So the moment they are breaking that strong high, we are now violating these strong highs, right? We have failed to move to break this weak low, right? And instead we've broken the strong high, right? So this scenario is what we were explaining yesterday and saying that if we see our price moving and violating the rules of the downtrend which was in existence, as in breaking the strong highs or the lower highs that we are having there, we call this one a church, right? So the name of this point, it ceases to be a strong high, then we'll refer to this as a church. So our price is now violating the downtrend rules and our character seems to be changing. So we refer to this as a church or change in character. Hope we all understand this. If you don't understand it, we can actually refer to yesterday's video and we get to learn about this church guy, right? So this is all about BMSs. This is how we actually see your BMSs, right? So for this lesson on market structure and BMS, I think you have seen clearly how we actually do it. The opposite is true for an uptrend, right? So it's enough and I'm done with the BMS, right? But for the sake of those that are actually in our free WhatsApp platforms, right? Let me just go further and explain what we are expecting on this V75. So since we have seen a church here, what it now means, it means we now move to apply our concepts of premium and discount, right? If you check in this channel, you'll see other videos that explains this concept. You check your premium and discount, then you consider your supply and demand zones and you map, right? But for the sake of this video, I'll just simplify everything, right? For the sake of this, I'll simplify everything and I'll just explain a bit of what I am expecting. I'll just consider the extreme zones in this case. So what I'm expecting is, since I'm having my church, I'm now expecting my price to correct, right, back to the extreme low that we have there. Back to the extreme low, right? Because our trend seems to be shifting from a downtrend to an uptrend now, right? So I expect, all right, let me do this, right? Right. So I'm expecting our price to correct. This is a corrective move, remember, to correct back to these zones, then we'll continue in the upward direction like that. So after a church, if my price is going to break this high now, this high will be referred to as our new BMS and will continue in the upward direction. So for the setup for this V75 is we are actually expecting this will be the best setup, or this will be the best zone to actually take the buys on this instrument, right? So we'll be expecting to take our buys from this low and we'll be pushing upwards to break that high and we'll be going up like that, right? But the initial or the first target that we expect, we target this high that is here, right? The last order block that is here, the low of that order block. That's what we put as our first TP or TP number 1, right? But if you go deep into this analysis, of which we'll explain that in later videos that have to come, right? We can also consider this low that is here, right, is a demand zone. Remember, this is a demand zone, as a demand zone, and we can expect our price to actually come and just bounce in this demand zone and we go upwards, right? So depending with the confirmations that you're going to get in this zone, you can also consider this as a buying zone and you can also take buy zone if you get enough confirmations, right? But I'm saying the best zone for our buys will actually be this extreme low, right? Why? Because there are some imbalances, right? This is a concept that I'm here to explain. There are some imbalances after this candlestick that took liquidity from here and we are now shifting there. We got a big bullish candlestick that created some imbalances there. So I still believe that there are some imbalances that have to be closed down there before we actually move into the bullish move that we're expecting, right? Nevertheless, if price gets to 10 from this point, we can actually take the buys, right? But this we can only consider if our confirmations are too good and too clean, right? So let me just remove that and just leave the extreme one like that, right? So guys, I believe you have actually learned something. I believe this lesson was very, very helpful, right, on how we actually analyze our market structure, right? So no matter how the chart is looking like, it can actually be simplified by moving or by taking or analyzing the instrument step by step, considering the highs and the lows, the strong highs, the weak lows, and we go like that, right? So see you guys in the next lesson that I will bring you, right? Hope you have learned something. If you have learned something, leave a comment in the comment section, right? Also share with your friends this video, right? And if you haven't subscribed, remember to subscribe. Thank you guys for your time. See you.